Hey guys, welcome to part 2 of the top 10 tax deductions for landlords. Now, in case you missed part 1's video, I'm going to drop the link down in the description below so you can check it out on your own terms. Now, let's get started with part 2 of this video. So, the fourth tax deduction that you can take advantage of is the personal property deduction. Now, I'm not talking about personal property as in you purchase a car and that's your personal property, or you purchase a laptop that's your personal property and you can write that off on your business tax return. No, that is not the personal property I'm talking about. The personal property that I'm talking about is anything from appliances, furniture, or any other things that you use for your rental properties to put inside the rental property until maybe the tenant can buy their own property, or maybe there's just no chance for them to purchase their own property. So whatever you spend on personal property to use for your rentals can be used as a tax deduction on your tax return. Now, the rule for of writing these personal property items off is if it's $2,500 or less, then you can utilize the safe harbor tax deduction, which means that anything that's $2,500 or less does not have to be capitalized, meaning that you don't have to add it to the basis of the property and depreciate it over a certain amount of time. So that means it would be 100% deductible. That means it would be 100% deductible as long as it's $2,500 or less. Moving on to the fifth tax deduction, and that is the pass-through deduction. Now, this deduction came along when we had the 2018 Tax Cuts and Jobs Act. Now, this allowed landlords to take a deduction up to 20% of their net profits from their business, as long as it's a qualified business. Or you could take 2.5% of the initial cost of your rental property, plus an additional 25% paid to your employees. Now, with this deduction, this pass-through deduction, this will be good up until 2025. So as long as you have business income that's a qualified business, and you have income that you're generating from the business, you can take that 20% deduction, and that will help you lower your tax liability. Moving on to the sixth deduction, and that is the travel deduction. Now, this is the travel that you incur to either go to your tenant's property to fix their, let's say their water heater, or make some repairs on their property, or this could be you traveling from your place of business to the hardware store to get supplies to fix a repair on the tenant's property. So you can deduct their actual expenses, or you can use the standard mileage rate, which for 2020 is 56 cents. So let's say that you're spending, let's say $100 in gas to go to and from your tenant's place of residence to make a repair. Then you can write off that $100 on your tax return. Or if you choose to use the standard mileage rate, then that would be 56 cents per miles driven to and from your tenant's place of residence and to going to the hardware store. So you have the option to use either the actual method, the actual expenses method, or the IRS's standard mileage. So your tax professional can see which method would be beneficial to you. Now, one thing you cannot do with the travel expense deduction is deduct expenses that helps improve the property. So when you're improving the property, you're adding more value to the property. So you're making the property more valuable. So that would not be something that you can deduct because it's improving the property and it's not a necessity. Also, if you are actually, let's say that you're taking a trip, you have properties that are in another state and you have to travel to and from another state to get to your property, then you can write off the airfare, the hotels. So let's say that you are going to one of your rental properties that is out of state and you have to either take a cab or something out there, or maybe you have to take an airplane. Then you can write off the expenses that you spent on airfare, hotels, and possibly your meals, depending on how it's used, how the meals are used. And moving on to the seventh tax deduction, and that is the home office deduction. Now, this applies to your business whether you are renting real estate or if you are owning real estate. Let's say that you're using your home office. Let's say that you're using your house where you currently live for your office. Maybe you have a spare room in the basement or a spare room upstairs. Any spare room that's in your property, you're using that as your office space. You can write off only that portion of the house that you're using just for business related purposes. So if you're going to utilize that room to your advantage as a home office deduction, you can only use it for business purposes, meaning that if you're using a bedroom, you can't sleep in the bedroom and then use it for a business purpose because you're still, you're doing it for both things. Then it wouldn't be a home office because no one ever sleeps in their home office. So let's just say that you have a house that's 2,000 square feet, and you're only using part of a room that's only 300 square feet. So you have to determine how much of a percentage of your home that you're actually using to determine how much of your expenses for your house that you can write off. So we have a $2,000 square foot home, and you're only using 300 square feet of the room. So that equals a 7% business usage. So you're only using 7% of your house for business related purposes. So any utilities, internet, other expenses that your household incurs that's related to keeping up with the house, you can only write off 7% of those total expenses for the year. Now, these were the second sets of the top 10 tax deductions. And if you are wanting help with learning more about these different tax deductions, and you want help to make sure that you're paying the least amount of taxes on your tax return, then click that link below to book a tax planning session with me where I can help you, set you up with a good plan to make sure that you're always paying the least amount in taxes. Until then, I will see you guys on part 3 of this video.